The two investment guys join us now, and guys, let's get right to today's topic, the global financial markets. We have two different economies, it appears. North America and Canada and the US and even England, the economy looks pretty good. In Europe, it is a mess.
Yeah, so they're very divergent issues there. In North America, you know, we have a US Federal Reserve that's actually almost finished tapering its bonds. They're looking at raising rates down the road here as we see the economy starting to, you know, it's improving and it's trending in the right direction. It's time to, you know, take the foot off the gas a little bit. And it's the opposite in Europe, where the economic numbers continue to disappoint, including Germany. And they're actually lowering rates, and now they're talking about their own version of QE. So it's very different circumstances.
Let's talk about the interest rates a little bit. We can see rates rising here and probably in England as well, but in Europe, they're already starting to cut.
Yeah, the European Central Bank is very clear. They've been trying to combat deflation for some time now. This is a trend that's been going on for about 18 months or longer. And so they recently cut rates. They've started to implement some similar activities as the Federal Reserve and the Bank of Japan have in terms of going out and buying assets in the market, trying to create some liquidity and force the banks essentially to start to lend. There's in fact 6 of the Eurozone countries have negative interest rates on the 2-year bond. So, you know, you
give it away.
Exactly. So it's a pretty desperate situation right now.
And what about China and Asia maybe? Just touch on that a little bit.
Yeah, so in China, I think the debate is over on whether it's a hard landing or not. It's not a hard landing. What we're seeing is, you know, GDP growth rates that were just not sustainable for long, long periods of time. If you have GDP at 9% in a, you know, pretty far developed country, that can't continue. So it's come down, where are we, 5 or 6, and you can debate that number all day long. But the fact is, it's not going to come to a grinding halt, and therefore their consumption of everything else that the globe provides for them and their export output is, you know, it's going to be a little more muted, but I would hardly call that a hard landing.
And Kris, how does an investor play these markets? Do we buy Chinese mutual funds, sell European ones? Should we be doing that?
Well, I think investors, at least the investors we work with, need to keep a long-term view and need to stay focused on the longer-term trends, and particularly in North America, where we're seeing continued improvement in the leading economic indicators out of the U.S. Jobs numbers continue to improve. The U.S. represents 25% of the global economy, and so has a pretty big influence on what we see. So I think just staying focused in the long term, trying to filter out some of the short-term noise that we see from day to day in the markets will help keep investors' long-term goals intact.
And Grant, if anyone wants to contact you guys?
Yeah, so that's twoinvestmentguys.com, and we certainly welcome questions and comments.